market. But even when we had a big up day, the important thing to remember, we are still in the process of decoupling from a paper silver price to a physical silver price. But let's go check and see just how much paper make-believe silver was actually traded on Friday. This comes from the dude who tells us that the silver market on Friday, hold on here, get the right screen up, which we do, traded 947 million paper ounces. The COMEX had the deliveries, blah, blah, blah. China is pricing silver now. And if the COMEX tries to bring it down, then we have arbitrage, okay, meaning that people can buy in the West and sell in China. And China is very, very happy to take that silver. But 947 million ounces, need I remind you, most of you know this already, but 947 million ounces in one day in the paper make-believe, what we like to call fantasy island, deplane, silver market, right? The paper market, the electronic market. That in one day is more silver traded than the entire world silver mining industry produces in one whole year. One day, they trade more paper, right, than the mining industry produces in one full year. Let that sink in. The paper markets are in big trouble. We're going to talk more about that here in a little bit. This, oh man. Okay. But on a serious note, we're getting reports now over the weekend. I don't know if you've heard this, but that silver selling for like $90, $91 per ounce. Let's go check that out. Oh, man, we got a lot to go over today, guys. Okay, here we go. And this came from TikTok. Silver selling for $91 in Dubai and China tonight, if you can find any. Silver closed at $77 an ounce in Chicago yesterday. What about, just to demonstrate, hopefully you realize what a historic time we are in right now for the precious metals. Literally, the odds of a move like we had on Friday are less than getting struck by lightning. Wait till you hear this from our friend Edward Dowd, what's happening in the world of silver. And we're getting reports now. A lot of speculation. I'm just reporting what's out there, but I did go out and check on this next one. In this, I think there's a big, interesting takeaway in this, that there is a shortage of 1 kilogram bars, or let's say sold out. Silver Ape King said, when prices rise, hold on here. There we go. Got you on the right screen. When prices rise and shelves go empty at the same time, will silver become unobtainium in 2026? Will we not be able to get silver? He pointed the screenshot out. JM Bullion, 1 kilogram silver bars sold out. Okay, I went out and looked after this was up, and I went to a number of different of the online bullion retailers, and it did appear to me that what we're seeing in the 1 kilogram, and there's a reason why the 1 kilogram bars are important for us to watch, but that it did appear to me that on a number of the different sites, at least as of last night, 1 kilogram bars were, let's just say, beginning to show out of stock, not available, et cetera, et cetera. The reason why we want to follow 1 kilogram bars is because that's in the United States, we're hooked on ounces, 1 ounce, 10 ounce, 100 ounce. Okay. But the rest of the world, which is also a more important part of the silver market right now, they're on this thing called the metric system. The cap of all 500 S&P 500 stocks is now running a staggering 63 trillion. Okay. Thus, American stock investors' implied portfolio gold allocation is still way down, near 0.4%, a rounding to zero. So what that's saying is that when you compare the amount of money invested in gold allocation to the overall U.S., just the S&P 500, it's 0.4%, which actually rounds down to zero. That's not 4%. Okay, that's not 0.04. That's 0.4%. That's basically zero. That's astounding, especially with gold at lofty all-time highs. Realize American stock investors control the great majority of global stock market capital. So them gradually returning to gold is huge, and we're seeing that. For centuries, minimum gold portfolio allocations of 5% to 10% were universally recommended, giving gold's highly valuable, unique diversification attributes. That comes from the ZLLC report. It's easy to make a case for 20% allocation. And we know that was at Morgan Stanley, like put out a 20-40-40 portfolio. But even if American stock investors' gold allocations only grow to a still immaterial 2 or 3%, the coming capital inflows into gold will be vast. Yeah, we're talking like 8 times, not 8%, 8x, right? 800%, 8 times, 9 times, 10 times. They will join ongoing strong central bank and foreign demand to drive gold much higher. Remember, okay, and that again comes from a report called Essential Gold Investing from ZLLC. Guys, remember that, right? Number one, there's 2 big key takeaways.